Having good books is going to help you run your business better, have your properties be more effective and efficient, and also just help you on the overall goal of financial freedom.
Having good books is basically like Neo in the Matrix.
It's like a superpower.
Welcome to the podcast, Real Estate Investing with Coach Carson. I'm your host, Chad Carson. You can also call me Coach Carson. And this is a show to help you get out of the financial grind so you can spend your time doing more of what matters. In my conversation with Kat Longovan, a former CPA and now full-time investor, we show you how bookkeeping, yes, bookkeeping is the ultimate secret weapon of real estate. If you can apply these lessons, you'll stay more organized, get more money for your deals, and uncover hidden profits. Let's go learn how to do real estate bookkeeping like a pro. So Kat, I want to talk about bookkeeping. Real estate investors have to keep good books. They have to run the numbers. They have to understand this stuff. But I'd love to ask a question about your own history. So you were a CPA, a certified public accountant. You worked for firms. You're auditing people in the corporate world. And you obviously understand accounting and the books better than anybody does. But can you think of a story that kind of help us understand like why bookkeeping is even important for people to pay attention to? Like, maybe an example of when it's not done well, the negative consequences. I'd love to hear if you have any stories on that.
Yes, I do. So I actually, being an accountant, CPA, knowing all these things, when I started investing in real estate, I did not do that. You would think, I would have had perfect books, but I didn't because I was in the mindset that, well, I'm not really a business owner. I'm like, I just bought property. I didn't feel like legit. I think looking back, that's how I think what happened. And so I started with I bought 3 duplexes and we had heavy rehabs, and come year end, I'm trying to figure out are we even making money with this? How much did I even spend? Did I overspend on the rehab? I had no idea. And I scrambled before tax season to figure out, okay, what are we doing? And so it was tedious. I couldn't find receipts. So I'm pretty sure if I were to actually audit my books of the first year of investing, it was probably missing a whole bunch of stuff. And so really it was I had no idea where we were headed. And I knew at that point, okay, we are investors. And so I think that was when it changed. And I really kind of set up my books moving forward. And it's really helped me organize myself. Right now, I don't make any decisions before I go to my bookkeeping and see where are we at? How are we doing? And so it's really important just to know, as an investor, you analyze the deal, right? And you're this deal is going to be, a cash cow. And then when you actually look at the picture on your books, you got to figure out, is that really the case? And a lot of times, unfortunately, that's not the case. And so you just got to figure out, okay, what do I need to do? And so that's why.
Yeah. Thank you for being transparent about your story. I think we don't have enough honesty in real estate investing. And one thing I've noticed is that, so people are listening to this are okay, good. This is a relief. Even somebody who understands accounting, when you jump into the real estate business, there's so many things to do. You got to manage the money, and you got to buy the property, and you got to manage this remodel. And so bookkeeping sometimes seems like the thing you're supposed to do at midnight when everything else is done, and it's hard to get it done sometimes. So we're going to be talking, and I'm going to be asking questions of you of how do you do this right? How do you do this well? But if anybody doesn't have good books at this moment, you're not the first one, right? And it happens. But maybe we could talk about so if you do have good books, we're going to talk about what that looks like to have good records and do this. But if you do have good books, what are some of the benefits? You said you can run the numbers well. You can understand if you're actually running the numbers. Can you think of anything else that's helped you now that you've been in real estate investing for a while? What have been some of the other things that really helped you by having a good set of books?
The first benefit is really being able to borrow money. Once you get to the point where you're doing commercial loans, your books are going to be really looked at, and that's really how your lenders are going to lend you money. So it really becomes key. It's also helped me raise capital, right? My investors like to know that I have clean books and records. And also it just helps me plan for the future. Where am I headed? What properties should I sell, right? And I've sold a couple properties based on me looking at the books. I thought I bought, a really great deal. And then when I look at my books, it's this is not cash flowing. We got to get rid of this. Or can I figure out sometimes we forget that we're still paying utilities for your tenants when they're supposed to be paying for it.
I've done
And
that.
so
Been there,
that
done
perspective,
that.
it's so bad. I'm like, what? And so, yes, having good books is going to help you run your business better, have your properties be more effective and efficient, and also just help you on the overall goal of like financial freedom, right? We want to make sure that we're making money. If these deals are not making money, they got to go.
Yeah, absolutely. I want to tell you a story, Kat, to see if you relate to this. But one of my favorite movies is The Matrix. So like Neo and going into this futuristic weird world. And the thing about that movie that one of the parts I loved was that he eventually he becomes this superhero who can see the entire matrix like in zeros and ones. Like so he sees everything in numbers. And I'm like, okay, so you see those little flowing digits everywhere. Well, one time I started thinking about bookkeeping. I was like, you know what? Having good books is basically like Neo in the Matrix. Like when you finally before was you're just this ordinary person, and then you do bookkeeping really well, and all of a sudden, like the way literally, like when I look at my reports of my business, and it's like I can see everything. Like I can, to your point, like I can see if a deal was a good deal or not a good deal. And sometimes I'm surprised. I thought, oh yeah, that's a great deal, but then it didn't make that much money. Or on the other side, I've had some on my YouTube channel, I've been doing these analyses of my properties over 15 years and 20 years. And I was really surprised that one of my deals that I thought was like a cash cow deal, it's made some cash flow, but actually made like 5 or 10 times more money on the appreciation of the property. And I was like, I was really surprised. I was like, really? Like, I thought that was I thought I was making all my money on the cash flow. And so on the other side, it's like, it's informed me and kind of educated, made me feel more powerful and intelligent about making the next decision. Like, okay, well, maybe I need to buy more properties that look like that or for this reason. So I don't know. How does the Neo metaphor, is like the Matrix is like a
It
bookkeeper?
makes, yes, it makes a lot of sense. It's like a superpower. Having clean books and records is like a really good tool to have in your toolbox as an investor.
Yeah, so our job is we're here on this podcast to try to make bookkeeping sexy. It's like cool, right? It's like this is a good thing, right? Everybody, this isn't boring. Come on, so yeah. So all right. So that in mind, that we're all going to be like Neo or our version of Neo in the Matrix. Like, so it is beneficial. There's lots of, and not to mention all the benefits we just mentioned. Also, just you got to do your taxes at the end of the year. You got to turn this stuff in. So let's talk about how do you do that. So, and this is the thing I loved about your story, Kat, is that this is from a practical standpoint. Sometimes people talk about theory, like you're actually doing this. I'm doing this too. Like what? If somebody is saying, all right, I just want to start from the basics, like what are some of the most basic things we should think about? Like what is bookkeeping? Like what are we talking about here? Like, can you break it down for us, kind of the basics of it?
Yes. So bookkeeping is basically the recording of your transactions. It's record keeping, right? So it's like having receipts at hand, like knowing how much you're spending in receipts, having organized systems for your books so that you can know the numbers. Bookkeeping tells you the story of your business, right? How much you spend, how much you're making. And then it also tells you, how you performed, right? And so bookkeeping is really just tracking transactions, it's categorizing transactions and putting them a label. So you have rental income, you have utilities, you have mortgages, all these different things that are happening in your rental property that you need to track. And so bookkeeping is really just categorizing this, putting it together in a system, a software, a spreadsheet, whatever it is, and making it make sense.
Yeah, and so when you say recording, it's not enough just to have a credit card statement. Some people might think, okay, well, I spent all my money on the credit card, but like you're actually saying categorizing it, like almost like in the library, you have this section is this section, this topic, this section is another topic. You're saying you have to label them or categorize them somehow, right?
Correct. You want to know, okay, how much of this is what, right? Because a credit card statement is just going to tell you how much or a bank statement is just going to tell you how much money comes in and out. But you need to know for what. What is this for? Is this even an expense that is valid? Is this something that I should be spending money on? And so really having bookkeeping is categorizing it in a way that you're able to make decisions with that. So, and also it tells you exactly what you're doing. And so a lot of times I've had, when I used to do bookkeeping for other people, it was like, they're like, well, I know I have cash in my bank account, and so I'm making money. And it's like, are you really? And so bookkeeping really helps you figure out, okay, what is coming in? Is it everything that I need? And what's going out? Or am I overpaying for things?
Right. Yeah. It tells the story. I think that's one of the best ways of saying it, like you said. And then the other thing you mentioned, so you have these you have, whether it's a spreadsheet or a software, which we're going to get into what you recommend and I use as well in a second on how to record those. But the other piece of that is if you tell a story to the IRS, they don't believe you. You actually have to back it up with
Yep.
documentation, right? So there's a set of records. I guess you could think like two parallel systems. There's the records that you put in a spreadsheet or whatever, and then there's the proof, that you had that. So how would you describe that part of it, like the organizing of the paperwork, the receipts? Maybe what do you do that? How do you keep track of that?
So usually I try to have everything recorded electronically as much as possible. So we actually have a Google Drive, and there's a Google Drive where we organize all of our receipts. We also have, if you have Home Depot, we have Home Depot Pro accounts, right? Every time I go to Home Depot, there's a receipt that comes in, and I can always go back to Home Depot, Lowe's, and see my receipts there. You always have to have proof of that those expenses actually are a business expense, right? You go to Walmart, you could have bought, clothes, but you want to make sure that you can justify that Walmart purchase was a business expense. So we do a lot of like if I go to a restaurant, let's say you and I go at lunch and we're having a business meeting, right? I need to justify that lunch was actually for business, or I could have gone to my husband on date night, right? So really just having the way that I see bookkeeping is like you have to have a system and process for bookkeeping, right? You have to set up, okay, when I spend money, what's going to happen next? And so usually just take a picture, like a lot of people think like, oh, I have to have all these receipts and I have a shoebox full of receipts. Really, just take a picture of the receipt, write on it, be like, okay, this is for property X and Y. Take a picture and then have a folder on your phone that's called receipts. That could also work out as long as you have some sort of backup. And then it's also going to help you remember what that was for, right? Sometimes I buy things and my bookkeeper will be like, hey, you forgot to send me a receipt. And I'll be like, let me go look at where I put this, right? Because you forget 2 months, 3 months down the road, are you really going to remember what you purchased at Walmart for your business, right?
Yeah, I found for myself, that's where the kind of train comes off the rails is on, if you don't have some kind of front end system, like you said, use Google Drive, which I know I use a lot as well. And for our real estate business, we use Evernote, and it's another version. It's just a way to save it. And this on my phone, I have an Evernote app. And like this weekend, I was just at a conference, a real estate conference, and I ate lunch there, and I had a conversation about, some kind of strategy that this other person was using in another city. So they gave me the receipt. And it takes an extra like 2 minutes, right? So got the receipt. I took my pen out. I wrote on there, talked about new financing strategy or different financing strategy with this person, wrote their name. I snapped a picture of it on Evernote, uploaded it. It took like, literally 2 minutes. But yes, it's that extra 2 minutes, like, because you have to do that every single time. But in the end, I forget about it after that. Like, I'm done. And I'm curious, as you've been an auditor and you've done this for professional, I want people who've never been audited, particularly by the IRS, like why I want to explain like why this might matter. So like you have your books and your spreadsheet or your bookkeeping, and then you have all these pieces of paper. Like how would this actually come about? Like if I did get audited, what are they going to ask me for? They're going to say like, hey, show me the receipt of that lunch you went to. They're going to want to show me like what kind of things are they going to be asking for so that we can know ahead of time and be prepared for that?
They're going to ask you for receipts and proof that the expense was like ordinary on your type of business and necessary. Ordinary meaning everybody who does real estate is going to have this kind of expense. And then necessary meaning you actually needed it for your business. And I actually had a client who he failed an audit. Like we had a package this big with like bank statements and we tried to like prove it. The IRS was like, listen, these Walmart purchases, I can't know what it was. If you don't give me a receipt showing what that was, I can't accept it. And he had a lot of like business lunches and stuff like that, but he had no receipts to justify like, okay, how was this expense for business and how was it necessary? And so the IRS will come back and basically if you cannot support it, the bank statements are not enough. And a lot of people are like, well, I pay with my credit card. It should be fine. And nope, it's not. So he failed the audit. He had to pay $12,000 back to the IRS.
Got it. So that's the pay. Like if we can't get you with the benefits of the superpower of Nemo, we can get you with like, all right, if you get audited and you don't have this stuff, then it could be really painful. And that could be not only a long process, a lot of your time, but then it could cost you money where you're having to pay back taxes. And if you get audited and you lose, right? If you lose money, you're probably going to be on the list. I would imagine that you're going to be on the list to be re-audited at some point. Is that true? I don't know if I've heard that.
It's I think it is. He actually, this person got audited 3 times for 3 years back to back.
There you
And
go.
it's because the first one they caught it and they're like, oh, I don't know. So all of a sudden he was being audited for the other following years. And one, he had to pay, me to help him collect the documents. And then on top of that, we weren't able to like win the case because there was not sufficient evidence. And so having that system will, one, save you the trouble of like having to hire somebody to figure out where everything's at. And then two, it's going to save you money as to not having to pay them back. Because you can win if you can prove the IRS is the opposite of like our justice system, right? It's like you're guilty until proven innocent, and so you just have to prove them like I did this right.
Yeah, got it. All right, so proof, got it. It's in my head now. So let's talk about some like basics. So I think one might just be having, you mentioned bank accounts and credit cards. So can you talk about like just good bookkeeping practice with business bank accounts? So like let's take the example, you just got into real estate, you're buying your first property. Oh, I'm not really in business yet. Like some people might like have one bank account. Like so, how would you recommend people set up their bank accounts, their credit cards to sort of help the next step of actual bookkeeping?
Yes. So the first thing is do not commingle with your own like credit cards. Like a lot of people are like, oh, well, it's only one property and I can categorize it in, my head. And so really just if the property is under your name, you don't have to open a business account. You can just open a bank account under your name that is specific for that business. And then you don't have to get a new credit card, but we probably all have at least like a couple credit cards. Let's allocate one specifically. And if you don't have one, you can try to get one and just allocate it specifically to your real estate business. Do not use it for personal expenses. Commingling is also a big issue. Like if you provide bank statements and there's personal activity in there, that's going to be an issue too. And so really just have it all separate. This is my income. This is my expenses for the business and nothing else. We don't need to see, the Petco purchase in there. So just have it really separate. It's going to help you make the categorization a lot easier.
Yeah, I was going to say that like, not only is it, avoid issues with IRS, but I'm just thinking when you actually do your bookkeeping and categorizing, if you had to like go through and like separate every transaction, like that is so much time to have to like do that, right?
Yes. And I had a client, like when I used to do bookkeeping for other people, I had like a little side business and I used to like help catch up books. And they would just be like, here's my bank account for my business, but it's also my personal account. And I had to categorize all the personals out. And then and it was like thousands of transactions and it was a nightmare. They would pay thousands of dollars just to clean that up.
Right.
So you spend so much more time. So just open a new bank account, open a new credit or select a new credit card and just separate that and keep it separate and do your best to never have to mix it at all.
Yeah, I like that. I want to run an idea by you. I don't do this anymore. I have one, main operating account for multiple properties, but I did hear, especially small and mighty investors. I've had students and people I know who, let's say they had 10 properties, they would actually set up 10 separate checking accounts for the 10 different properties, and then maybe even have like a different credit card for each property. Like, all right, on the plus side, it's really easy to like not, you haven't mixed those. You can just see like, all right, every transaction in this bank account is for this property. But obviously, there might be a little bit more reconciliation and some other work. How do you think about that as a bookkeeper and a CPA? Is that a good idea, a bad idea?
It really depends on your preference. Of course, if you're outsourcing, it's going to cost you more because there's more bank accounts to reconcile. Personally, I would not do it. Like I thought about it and I'm like, this is way too much work to reconcile. So we use like a system for that to separate those transactions out. So that's where the systems and processes come in place. But if you're able to do that, ideally, like if you're somebody that really likes to do that, it works out. And I've known a lot of investors that does it. But when you get to like 50 properties, it's a nightmare.
Yeah.
So at that point, you really have to rethink it. But now these days you have like accounts like what's it, Base Lane? There's like these new bank accounts, like online bank accounts that allow you to do things like that, where you have one bank account, but then you're able to like get debit cards and credit cards that separate your property. So you could get a debit card for each property. So those new softwares out there are really helpful for somebody that wants to do one reconciliation, but wants to track individually. And I have a couple of friends that do that.
Interesting. Yeah. So technology is definitely something that can help. And that's a good segue. Software is always a question I get with bookkeeping and what software to use, how to use this. So let's tackle that question. Like for you, what do you personally use for software to actually track your transactions? And then maybe what are some other recommendations you might have for different ways to use software?
So I use QuickBooks. Just as an accountant, it just kind of came easy to me. And usually when I start, I actually get like discounts for it, but it's an expensive software. So when you're starting out, you don't really need QuickBooks. Like there's Tessa, which is really good for like beginner investors. I know that I'm pretty sure they still have the free version. They
Mhm.
have a freemium now that they charge like $17 if you want more upgrades. But Tessa's a really good one. And it's
That's
specific for real estate investors.
Stessa, Stessa, right? Like assets spelled
Assets,
backwards.
yes, yes.
Stessa. Okay. Got it.
Yes, I really like it. I always say like if QuickBooks and Stessa had a baby, that would be the perfect software
I
for
agree. I
for
agree.
real estate investors. So really user friendly, and I highly recommend a lot of the students at our mastermind. Like I'm like, just start with Stessa, like just do it, and then from there later on, if you want to do QuickBooks, you will outgrow Stessa at this point. Eventually, once you have more properties, more businesses, it becomes a little bit more complicated, and QuickBooks it comes in handy.
Mhm.
So I love QuickBooks just because I'm able to track like different businesses and different properties all in one place, and then my bookkeeper can do a lot of these things for me.
Agreed. Yeah, so I'm the same. I use QuickBooks and I learned it. It was a big learning curve when I first started as a 22, 23-year-old brand new to business. My books those first years were horrible. Like it was just the way I entered transactions, but I just studied it and learned it. And now though, I really like QuickBooks. I like the flexibility. And as you get to more advanced real estate transactions, for example, doing installment sales and 1031
Mhm.
exchanges and just being able to do a lot of these entries that are more specific to real estate and more complicated real estate, I think you kind of want to get into that. So I like that. I think you've mentioned a couple of themes here. These theme of what you start with, and you have to think about what you're going to grow into. Like if you're going to be a bigger property owner, having a property account, a checking account for each property sounds good when you have 5. But if you're going to have like 50, like you're going to outgrow that, and now you're going to have to start a whole new system. So it does pay to start thinking about how you want to grow and how much you want to grow. If you're going to be a 5 property owner, which is great, I love that, then you can have certain, you can, like I use for my wife and I, we have a one property outside of our main real estate business, actually 2, and we just use spreadsheets for those. Like, even though I know how to do QuickBooks, it's just been easier. Just I have like years of just a Google sheet, and every year I categorize the expenses. It takes a little bit of time, but it takes me like an hour at the end of the year to do it. And so spreadsheets, Stessa, QuickBooks, those are all softwares, but they all do. Maybe to talk about what the key components of what does the software need to do in your mind that really is the key component of a good software for bookkeeping.
I think the whether it's a spreadsheet or software like Stessa or QuickBooks, really what you want to be able to do is have all of your transactions with categories. You
Mm.
have to label them, right? So and a deposit came in for what property. So we're talking it. So the software really helps to make it easier because they basically you link your bank account, it downloads the transaction, and then you select, rental income, utilities, mortgage, whatever it is, and then you tag it to the property, and then the software helps create this profit and loss statement, which is basically all of your income minus your expenses to come up with what you're really making, and then so the software helps you do that, but you can do this on a spreadsheet, right? You can have all of your transactions downloaded from the bank statement, tag it in, and create categories so that you know, okay, this is how much I'm spending on these different items. Um, so that's why I do like the software. It just makes it a lot easier. I think a lot of people get really overwhelmed with spreadsheets, and so I think that having some software that helps automate that will really help with like, oh, I don't know how to start, right?
100%. Yeah. For example, I love one of the features I love in QuickBooks, which I'm sure other ones do too, is that like if I have a recurring transaction, like every month I have this $750 payment that goes out, and it comes out from a certain bank account to a certain person, that it can memorize that is a mortgage payment for property on 25 Maple Street or something, And so,
Right.
it automatically puts that class in QuickBooks, they call it a class, and then it automatically puts it in the income category. So if I had to do like that just saves me a step. I don't have to like manually do it. And if it's a new transaction, I have to manually do it. But like time gets to be really important. And so eventually, if you can use tech and software to save you time, and the end result is clean categories and all, that's a huge deal. Like that's really nice to have that.
Right. Yes. So the end goal of any bookkeeping system is really to have those reports that tell you the story, right? Because the data alone is not really going to tell you much. You have to really put it on this. The end goal is a profit and loss balance sheet, something that tells you this is where we're at. And so, and then you can create like your custom reports. You want to run different matrix. You want to know your cash on cash, your return on investment, all these different things that you can set up with your books once you have them there.
Well, let's talk about that. That's a good segue. So if you set up a good system on the front end where you're saving your receipts, you're entering the transactions, you're labeling them well, you now have clean books. I want to talk about like what the schedule looks like, because sometimes things come off the rails when just like executing it over time. Like what is a typical month, or maybe let's go week and then month and then year. Like what are some of the like major things you do from a bookkeeping standpoint just to keep this system kind of working?
Yeah. So if I'm like, let's go back to like when I first started, right? When I first started doing bookkeeping, I would do this monthly. I didn't really have that many transactions. Now, when you're doing a big renovation project, I highly recommend that you do this weekly because the renovation can get out of hand really quickly. And really seeing, right now I'm doing a huge project and I really just kind of look, okay, I'm like, oh, I'm 20K in, like I'm still like this far off. And so it really helps you kind of track that good. So once a month is a really good placeholder. If you have very little transactions and you have very little time, okay, let's do quarterly. But at least touch this quarterly 4 times a year. Do not wait until the end of the year to do it because it's going to really go in. You're going to forget. Like you don't remember. Let's look at December. Do you really remember what you spend your money on in January?
Right.
And so that's really a good place to go with.
Yeah, so you kind of scale the intensity of your bookkeeping depending on how intense your project is. So if you're doing a remodel where you're paying contractors every week and you have a budget, you're going to be entering that stuff every single week, watching your cash closely. Whereas if you're kind of in maintenance mode where you just have, I have 10 rentals, they come in every month, I got no major projects, once a month, once a quarter, you could do it at that point.
Yeah. Set up a calendar, put it on your calendar, because if you don't put it on the calendar, you're going to forget. So that's a really good one. And one thing I like about QuickBooks is I set up automated reports. So right now I already have a bookkeeper that kind of does all of this. So I set up automated reports for every time I have a specific project. And I'm like, we got to dig into this project because this is a big one. And it really helps you keep on budget, right? With your rehabs.
Let's talk about reports some. You mentioned kind of in passing that you like to do an income and expense report, also known as like a profit and loss. You like to look at a balance sheet. Can you explain, just in case people don't know what those mean or what those are, could you kind of unpack those a little bit? And then what are you looking for when you look at reports? So what kind of things are you trying to see on a regular basis?
Yes. So a profit and loss is also known as income statement. So it's really a statement that tells you here's everything that's coming in, all of your income, all of your rents or late fees, whatever it is, your Airbnb income, all these things. And then you have your expenses, which are your utilities, your mortgage, your staff, whoever, your bookkeeper, all these things. And it's going to give you like your net income, like how much are you actually making? So the profit and loss really tells you, am I making money? Yes or no, right? And then the balance sheet is really kind of, if you know what a net worth statement is, right? It's basically the net worth of the business. Like how much do I have in the business as far as equity, right? So the balance sheet has 3 components: is how much do you own, right? Your assets, which are your properties, people owe you money, equipment, anything that is yours that you can sell. And then you have the liabilities, which are basically things like things that you owe money, your debt, your mortgages, private money loans, whatever it is that you owe money to that you have to pay off. And then the third component is going to be your equity, like that's basically the money that you've put in the deal. And the balance sheet is called balance sheet because it's supposed to net out to zero. Your assets minus your liabilities plus owner's equity is supposed to be zero. Because at the end, when you buy an asset, you're either buying it with cash of your own or you're buying it with debt, right? So at the end of the days, you buy something, something comes out. So it's either your money or like lender. So the how I look at this reports monthly, the profit and loss is I really want to know how much money I'm making and where the money's going to. And so I'm supposed to be getting $1,000 a month in rent, right? Did we get that? And I'm supposed to be paying this much in expenses, right? My mortgage should be consistent. My utilities, if I'm paying for utilities, I want to make sure that I'm not like all of a sudden you find a spike, right? Every month it's like 100, 100, 100. And all of a sudden you're paying $500 in water. Oh, there's probably a leak. Let's go attach, like, let's go figure out what the leak is coming from. Or the other thing is like you start seeing like your maintenance, right? You're supposed to keep maintenance at 5-10%. Now, if it's getting out of control, you're able to figure out, okay, what is it that continues breaking? Like, is it the plumbing? If it's plumbing, and then maybe I need to upgrade my plumbing so that I stop having plumbing work orders. Is it the tenant that's breaking stuff, right? So really the profit and loss, it's really good to figure out how much money you're making, but also where the money is going for. And it helps you kind of attack the issue before it becomes an issue. And then on the balance sheet side, which is what one of the statements a lot of people don't know about, what it really helps you see is, are you paying down debt, right? Like, the idea is that your equity portion is going to increase over time because you're making money, because you're paying down debt. There's the return on like principal pay down. And it also makes sure that when you're like borrowing a lot of money, like I do, making sure that I keep my leverage on like in track.
Yeah, you described that really well, and I was just gonna like double click and kind of make the point that how important this is going back to Nemo and the Matrix. Like to me, the other bookkeeping work is the hard work. It's the kind of nitpicky stuff. I mean, some people enjoy it. I kind of enjoy it. Kind of like people enjoy cleaning their house sometimes. Like I enjoy having clean books every once in a while, but the fun part is having these reports because like you said, you can start seeing problems. Like I've heard people call that like exception reporting. So if you see 100 every month for utilities and you see 500, like it's really easy to see the exception, and then you can go ask questions about your business. Like that's the equivalent of Nemo seeing, oh, there's a one little digit that's off, let me go do something about that. Whereas like you can actually, a lot of months you might not see it. It might not be any changes. It might be 100. You spend like 2 minutes looking at your report and you're done. Like you don't have to do anything. And that's a good thing, right? It gives you a peace of mind knowing that, okay, things are okay. Got no problems. But then when you do see an exception, then you can dive into the business, talk to your property manager, figure out what's going on. So that's one thing on the income statement. That's such a key. I'm really glad you brought that up. It's a way to measure your business ongoing. And this is one of the, I'll give like a confession here. Like I've had really good books for years. My CPA says I have good books, but 4 or 5 years ago, my bookkeeper retired. She's amazing. I loved having her. She helped me do property management too, but she just was done. And so my business partner and I said, well, we'll just do it ourselves. And we do end up having good books eventually. But as you can imagine, there's a lot of things going on. We were traveling. And so it was like 3, 5, 6 months behind sometimes, like getting it up to date. And so eventually I'd get it right. But I missed all these like opportunities to make like real time decisions. And so just this last 5 months, I've hired a new bookkeeper, and I just forgot how wonderful it is to have like on time books. It's like, wow, like this month I'm looking at things and I'm making decisions. And so bookkeeping is not just like a 12 months later, let me see what my business did. It's like, if you can do it in real time, like that's where like the power of it is. That's the decision making. So I don't, do you have any other thoughts or examples there, how that's helped you as well?
Yes, also tax planning, right?
Yeah.
So like a tax accountant will not look at you or tell you how to plan. Can't, because if you don't have books and records, they're like, well, what am I supposed to plan for, right? We don't know how much money you're going to be making. So if you don't have real time books, a lot of people are like, well, I want to save money in taxes. I want to do all these things. I'm going to go talk strategy. But if you don't have clean books, you don't have anything, then there's no strategy and you can't really take advantage of the benefits of real estate. So usually I meet up with my accountant twice a year and I'm like, okay, let's look at how we're doing. And they can project out like, oh, you're going to make this much money. So let's figure out what you can do now. But if you don't do your books until next year, it's too late. You can't plan like behind, right? So you really need to plan ahead. And that's where having timely books really helps out as well.
Yeah. Well, you mentioned a CPA, and we've also talked about a bookkeeper. I want to segue into talking about hiring people to help us out. I just mentioned I hired a bookkeeper. You have a background as a CPA, and you still have an accountant who you work with. I think that's really smart of you too. Let's talk about let's start with the bookkeeper. Like when should I hire a bookkeeper? When should I do DIY? Do you have any opinions on that?
Yeah, so it really depends on your preference. If you're starting out, you don't have that much money available, then I would say you can try to DIY it. The system like Stessa or something like that is very straightforward. Another option you can do if you don't have a lot of money to be paid monthly is you can set up like bookkeepers, accountants. They all have like consultations, and you can pay like a one-time fee, and they can help you like set it up. They can give you guidance. They can make you like, hey, this is what you're supposed to be doing for the next couple of months, right? And then maybe you can check in with them, towards the end, like middle of the year. Now, once you are ready to move, like once you have a lot of activity, and if you're like already at like 5, 10 units, and you just have a lot going on, and you're like, okay, I'm ready to hire a bookkeeper, then I really recommend hiring somebody else. I'm a big proponent of like, you shouldn't be doing the little things, right? Once we're trying to grow and scale, like doing bookkeeping really kind of, for me specifically as an accountant, yes, I can do them and it's really good, but it takes a lot of time, right? And so that time, if I'm so digging, like if I'm into the details, it's really hard for me to look at the big picture. And so when I step back and I look at the big picture is when I'm able to decide, because a lot of times I'm so focused on like, did I categorize this utility without realizing that that utility shouldn't have been paid in the first place.
Yeah.
And so when you step back, look at the big picture. So eventually, my opinion is like, eventually the goal should be to outsource, so that you don't have to worry about that. You can actually look at the business from outside, and you can either hire like a bookkeeping company, or you can hire somebody like an Upwork that you can pay like directly and manage directly, by the hour. You can usually get that for like, I don't know, $8 an hour, and you can get a really good bookkeeper like that too.
What would you look for in a bookkeeper to know that they are a good bookkeeper? Any tips on that?
So you would want to make sure for real estate accounting, like it's very specific. So you really want to make sure that they understand real estate transactions. So the first thing you would be like, hey, have you ever worked with a real estate investor? Like, do you understand accounting for real estate investors? Do you understand how to categorize a mortgage, right? A mortgage doesn't get categorized just as an expense. You have a portion that's principal pay down, and you have interest portion. So one portion goes into your balance sheet, the other one goes into your expense. And so knowing those things, when you buy a property, you need to make sure that you understand how to record the purchase of a property. It's a big accounting transaction, and you can't just put everything into one place. So really just asking questions like, hey, do you know how to categorize certain things specific to real estate? You also want to make sure that they communicate well. How long have they been in business, right? What software do they use? And then the other thing is just how often can they categorize your transactions? What systems do they have to collect information from you? And also what security systems they have, right? Because you're giving them back statements, you're giving them all this information. You want to make sure that it's not going to be out there and potentially you get some like identity theft or something like that. So just really be careful in asking all those questions. And I actually have a worksheet that I can share later where I have questions to ask a bookkeeper when you're interviewing them.
Excellent. Yeah. So we'll give a little sneak peek. We're going to have a link below, and I'll go ahead and give you the link, coachcarson.com/Kat, where Kat has like a list of things that she recommends, kind of like a cheat sheet almost for bookkeeping and questions to ask. So a lot of the stuff we've talked about, she's going to consolidate that and put it in a sheet that you can download for free. So that'll be in the show notes and in the podcast description. So all right. So bookkeeper is one. I highly recommend getting a bookkeeper, but I also know people who do DIY and do excellent. So, but that's just a personal choice.
Yeah.
But I think kind of a non-negotiable, at least in my opinion, I want to see what you think too, is to hire an accountant to help you do your taxes. And so can you talk a little bit about their role in your team, what role they play, how they can help you, and maybe also picking a good one?
Yeah. So for preparing taxes, the CPAs, certified public accountants, but there's also something called EAs, which are, oh my God, they are, oh my God, I forgot the name. It just kind of skipped, but it's basically they do a certification for the IRS specifically. So all they do is like all taxes. So I use Grant Daugherty Solutions, and he's actually an EA, not a CPA, and he's great, right? So really, it's just when you hire a CPA or somebody that does taxes, you want to make sure that they're knowledgeable in real estate, because they're able to tell you all the different write-offs and the strategies that you can utilize to take advantage of real estate, right? Everybody talks about how real estate is great for tax write-offs, right? But if you have a CPA that doesn't understand it, then you're not going to be able to take advantage of that. So really having a team, and I honestly think that, trying to do your taxes on your own once you have like more than one property, it's hard because you're not really taking advantage. And TurboTax and all these like free softwares, they're not meant for complex transactions. And then a CPA will help you like they will also give you guidance, right? On like, hey, this is what I see on your books. Maybe this is what you should be doing. How about you think about? They're like advisors. They're really a business advisor as well that can help you leverage and move forward if they're good, right? There's a difference between a tax strategist and a tax preparer. A preparer would just be somebody that just prepares the books. It's basically a data entry of all your bookkeeping, put it on a tax return. The tax strategist is going to be, okay, with this information that you're giving me, these are the things that we can do to make your taxes and your financial position better. And so you really want to make sure that you're paying for the strategy piece as well. It might not be something that you feel like is a benefit when you only have one property, but once you start, if you're trying to scale and move forward, you really got to think about like, what's my vision? And the same thing we talked about, like, for bookkeeping, you got to really know where am I headed so that you know how to set up that from the beginning.
Yeah, 100% agree. I'm just going to kind of emphasize as well your accountant. I'm pretty good at bookkeeping. We both hire accountants, and it's such a key component because a big part of the benefit of investing in real estate are the tax benefits.
Yeah.
And I don't know about you, but like one of the reasons I hire somebody is because the tax strategies and the tax laws change all the time. And if you don't have somebody who's a real estate focused bookkeeper and a real estate focused accountant, or also I looked up EA as an enrolled agent. I couldn't remember what it was either.
Yeah.
So enrolled agent, either one, if you have somebody who focuses on real estate, they're doing this every single day. They're going to continuing education. They're going to seminars. Like they're spending all their time thinking about it so that they can serve you and help you. And what should we be doing with our time? You mentioned it earlier. Like if you're in the growth mode as a real estate investor, you should be talking to capital people. You should be talking to banks. You should be negotiating with sellers. You should be managing projects. Like those things will make you a lot of money. Bookkeeping and accounting are important, but if you could hire somebody who knows more than you do about it, and it costs you $50 an hour, $100 an hour, whatever the number is, like you can make more money negotiating to buy a property than you can, especially in the growth phase of your business. So I think that's super important, and it's what we do. So I guess that's all. That's the proof is in the pudding. This is how we do it as well.
Yeah. Yeah. I mean, I could prepare taxes. Like I know how to do it, but I don't want to do it because I feel like somebody else can do a bit better. Like there's a lot of people are like, well, this is like when you're starting out and you don't like, if you don't know, like there's people like, oh, I need to learn how to do bookkeeping. But if you're not a numbers person, you don't have to learn it, right? You don't have to be like, I need to learn how to do it all. That's why you hire experts to do it for you so that you can focus on the things that you're good at. If rehabbing houses, designing houses is your strength, focus on that strength and let somebody else do the little things. So yeah.
Yeah. So even if you hire it out, you have to understand it enough
Right.
to be able to. So like kind of like I'm not a great contractor. I give myself like a B plus for remodeling, but I do know I need to have the vocabulary to talk to the contractor to understand cost. Same thing with bookkeeping, accounting. Like you don't have to be the expert, but you do need to have some expertise in terms of like, can I communicate with my CPA about, the tax strategies? Can I read my tax? Like you need to read your tax return and like understand what it says. And so,
I think you definitely need to understand the concept of like, what's the profit and loss? What's a balance sheet? What am I looking at? And then, but you don't need to know like the little details of like, how do the debits and credits, like accounting has like all this complicated terminology. You don't need to know in that much detail, but you need to know how to like read these financials so that you can actually make business decisions with them.
Yeah. So, Kat, we've talked about a lot of different things. Is there anything else that I've missed or that you think would also be helpful for people to think about as a real estate investor and their bookkeeping?
I think it's really just what we've talked about, emphasizing the importance of setting this up early. So, like, let's not wait. Like, bookkeeping starts even before you purchase a property, right? You're spending money already, like, searching for these properties. You're buying, like, getting in, like, inspections, appraisals, all these different things that you have to track. And a lot of times we think, like, oh, it doesn't start until I actually buy the house. No, it goes before that. If you're joining a mastermind, if you're going to networking events, these are all business expenses that you need to start thinking. Like the moment you say, I'm going to invest in real estate, you should think I'm a real estate investor. I have a business. And from now on, I'm going to start tracking and keeping track of all these things. So don't wait until you bought the first property and are all the way through the end of the first year of that property. Just think about it the moment you start thinking about investing in real estate. You're an investor. You're going to start tracking.
Well, this has been so much fun. I'm from one bookkeeping nerd to another bookkeeping nerd. Like I say this in the most loving way, the positive way. This has been a ton of fun. As I mentioned earlier, we're going to have this kind of set of resources that you have for free. If you go to coachcarson.com/CAT, KAT, then you'll be able to get that. But I also want to give you a chance. You have a blog, you have other stuff going on in your world. So if people wanted to follow along with you, Kat, where can they find you? What do you have going on?
So the best place to find me is on Instagram. I'm there every day, and that's cat.invest. And then I have a blog called beyondjustnumbers.com, and I have tons of stories about how I invested and all the different mistakes I've made, and then also like a tip of like how to invest in real estate. So, and I'm trying to get better at posting more. So coming soon, more content. So definitely.
I'm definitely an Instagram follower of yours. You do great job and share so much awesome information. So definitely connect with her. I'll have links to all that in the show description, the podcast description, YouTube description. And I just want to thank you. Thanks for being here, Kat.
Thank you for having me.
In this episode, Kat explained how good bookkeeping can keep you out of trouble with the IRS on your taxes. But here's the kicker. Did you know there are completely legal strategies to reduce your rental income taxes practically to zero? In my next video, I break down how you can make $100,000 in rental income and still pay zero in taxes. Plus, my guest reveals the one tax form that every real estate investor needs to know about. If you're watching on YouTube, you can click on the thumbnail above me here, or if you're listening on the podcast or on YouTube, you can click on the link in the podcast or YouTube description below. I'll see you in the next episode.